Hi, Joe Kehrig with the Kehrig Real Estate Team, and this is your San Ramon Valley update for the week of February 12th. What we're going to talk about today is we're going to look at 2023 with prices and interest rates, how we got to where we are, and what we're kind of expecting not only in 2024, but in the next few years. So this first slide we're talking about is look at the 49-year average for the 2023 price movement. You can see the black is a 49-year average, and you can see obviously during March, April, May, June, that's where we saw the most increase in prices. Well, we saw the same thing. Matter of fact, much more in 2023. But then if you look at the bookends in January and the last month we have recorded in November, the price movement was actually down. But obviously overall, prices did increase. And you look at the Case-Shiller on the prices, and you can see, except for January, all the way through November, prices increased every single month. And you see right in the middle is June, in the middle of the year. Now, when we hit December, you will see that basically in December, we're probably maybe going to see a little, dip. But overall, we're going to see prices have increased, 3 to 5%. Again, even though most people consider 2023 being a slower year. Here's the estimated home price performance going all the way from 2023, 5.92%, so almost 6% that we talked about, the increase in prices. And they're not expecting as much in 2024, but you can see from 2025, 26, 27, 28, they expect that to be constant, kind of inflationary appreciation. So more 4 or 5% increases in prices. At least this is what they're anticipating. So not looking at any years, including 2023, including 2022, where prices went down. Yes, they did settle down a little bit, but for the most part, even though in the second half of 2022, the market really dumped, it had gone up so much in the first half of 2022, we still had a price increase as we did of almost 6% in 2023. And you'll see the percent of annual home appreciation from 1980 going all the way up to this year through 2023. The average was almost 5%. And that's what they're looking at in the next few years. Obviously, you see that, 2007, 8, 9, 10, where you see the decrease in prices. But every other year, they've been increasing. And you can see last year that, in 2022, they basically stayed about the average, about 5%, the 43-year average. But in 2023, obviously it even outpaced that closer to 6%. Of course, you see 2021 where they're just off the charts. They almost went up 20%. And in some areas around here, they even went up more. The percent of home price appreciation, seasonally adjusted, this is why owning a home is so important. So over 1 year, the average increase is 7%. You own a home for 5 years, and the increase has been over 50%. Own a home for 10 years, over 100%, and 30 years, almost 300%. So that's why home ownership is so important over the long run. Even though we've been having increases every single year, even though they've gone down the last couple of years, over decades, it almost outpaces every investment out there. 2024 home price forecast, you can see that, Goldman Sachs, MBA, Zillow, Fannie Mae, all the way across. This is what they're expecting. Now let's talk about 2024. This is what they're expecting in 2024. Well, Realtor.com is the only one that is thinking in 2024 prices are going to go down. The average is almost 3%. You can see across the board, they all think that they're going to go up. But again, I'll bet you when it comes out next month, you'll also see Realtor.com probably in the positive mode too, because we're seeing the market already start to pick up. But so for the most part, 7 out of 8 of the surveys out there still think prices are going to go up in 2024. And here it is again, the current forecast. And what I love about this, it shows you how people are thinking now the market is even better than a couple months ago. Last November, when we had all those increase in interest rates, you can see that, they thought, well, maybe the original forecast in 2024 was 1% or less than 1% or 1.9%. Look at Goldman Sachs went from 1.9 to 5%. That's what their current forecast is. So all the way down the line, you see increases in Fannie Mae, Freddie Mac, Zillow, Mortgage Bankers Association, Goldman Sachs, across the board, just in these last couple of months, they actually see prices, they're much more enthusiastic about the appreciation of 2024 than they just were a couple months ago. And what determines a mortgage rate? Well, we look at the 10-year Treasury, which it follows. And this is why they're anticipating rates going down. And like we talked about a couple weeks ago, being maybe 5.99, 5.75 by the end of the year. Because the index right now, it's the delta between the 10-year Treasury, where if you look at them, they follow almost exactly between the 10-year Treasury and the interest rates. Well, you look at it, the 2.9 delta, and it'd be 6.92%. That's about where we're at right now. But if you look at what the average delta is over the last 20 or 30 years, it's been 1.7. So if you followed what the normal delta, we would be down into the 5s, 5.7, 5.8. Why aren't we there? Well, it's because the Federal Reserve has artificially kept the rates high to keep inflation down. Now that inflation's down, it's to obviously to help the economy. Well, the Federal Reserve came out, I was on TV, and the reason you've seen a little tick up in interest rates right now is because the Federal Reserve came out and said, hey, the economy's stronger than we thought it was going to be, where everyone was talking about a recession. So the Federal Reserve pulled back and they thought, oh, maybe we're not going to see those 3 or 4 clicks down. Maybe we might not see it starting in the 5s. So interest rates ticked up, anticipating, because that's what happens with interest rates, is they hear something from the Federal Reserve, and even though the Federal Reserve, the discount rate doesn't directly affect the mortgage rates, it does, it's a ripple effect. So when they get news from the Federal Reserve, they tick up the interest rate in anticipation. That's why sometimes when they basically think it's going to go down, they'll lower the rate. And then it actually goes down and you don't see rates change, mortgage rates change, and you go, well, why not? Because they already had baked in a little bit. They had already lowered them in anticipation. So that's what we're seeing with a little tick up in interest rates. Now, hopefully we'll still see them come down a little bit. You can see mortgage rate projections. Look at December 2023, 7, 6.8, 6.6, through the quarters. Well, you can see in the fourth quarter of 2024, Fannie Mae thinks they're going to get down into the 5s. That we also feel too. So 6.4, 6.2, 6%, and by the fourth quarter, 5.8%. So expect interest rates to go down a little bit. What happens when we talked about a couple weeks ago? Interest rates go down, prices go up. Interest rates go up, prices go down. And that's what we saw. That's why you might see a little dip. We saw a little dip in January, and we might see a little dip in December 2023, where we actually see prices, fall back a little bit. And you can see the mortgage rates right here. This is the actual, is the blue line, and then you see the gray line, it turns into projected. And they obviously had gone up, but now they're projecting them to come down for 2024. So let's talk about what's going on with our market locally, for the San Ramon Valley. You can see that it's staying pretty active. The active properties in San Ramon have gone down a little bit, pendings have gone down, but still, if there is half as many pendings as there is actives, it's a seller's market. Here we have a situation where there's a lot more pendings than even active. So it's still a super hot market in San Ramon. Danville, you're kind of seeing the same thing in Danville, where you have a situation where there's a lot more listings that have kind of hit the market, but the pendings are up also. Very active market in Danville. Alamo, the same way. Few more listings on the market, just one less pending, but it still is a very active market. Alamo has slowed down a little bit, mainly just because of the price. Dublin market, you see the actives have gone up, also pendings have gone up. So again, a really active market there. The sold to list price, now we're getting up into 106%, 109% in San Ramon, Danville, 102% in Dublin. Like I said, Alamo isn't a good indicator because sometimes there's just 1 or 2 properties that end up closing. So, but in San Ramon, Danville, in Dublin, there's always 8 or 10. So that's a pretty good indicator. So, every market's a little bit different. Every neighborhood's a little bit different. Never hesitate, reach out, give us a call. If you just want to discuss a little bit, no obligation, about your individual situation. Joe Kehrig, 925-487-6838, or drop me an email, joe@kehrigteam.com, or visit our website to learn a little bit more about us, www.kehrigteam.com. Have a great day, and we'll see you next week.